You spent your money where? Good afternoon. So I have a story today about a woman that, well, it's just an unbelievable story. I think we should just get into it. So we will. It says, mortgage expert bewildered as woman blows 27,000 pounds in deposit money on psychic reading. This is from the Mirror, but it's from the United States, so it was 27,000, I believe. But they changed it to pounds, and so anyway, uh, so here's this post. It says a loan advisor has gone viral online after sharing the craziest thing she's ever seen on a client's bank statements. And I'll put the TikTok link in the description below so that you can see it. But it says in a clip posted on TikTok, Jordan Nutter from the U.S., who posts under Nutter Home Loan, reenacted a phone conversation she had with a client who was about to close on a property. Now, I give her props for saying in the TikTok that it's a reenactment, that it's not live, and it's not. It to me, it gives it some sort of realness. The client had sent through a bank statements for a proof of deposit the week before. She'd had $38,000 in her bank. However, when Jordan got the latest statement through, there was just $1,000 left in the account. She said, baffled as to where the money had all gone, Jordan called the client to find out what was going on. In the clip, she says, I got your bank statements you sent last night. I don't understand what happened. All the money is gone. I see all these withdrawals and I don't know what it is. Jordan's jaw then drops as the woman on the other end of the phone tells her she spent all her money on a psychic. He's like, you called a psychic. We're supposed to have $38,000 in this account at least because that's what we needed, and there's $1,000 left. So how do we do this? She said, we're closing in a week, so I don't understand. And the woman goes on to explain that she called the psychic to see if the house was going to close. And then so she says, but now all the money's gone. So have you talked to her about that? How's it going to come back? She said it's just going to happen. She has no idea where this money is coming from that you're going to magically get in the next couple of days that you spent on her to tell you that the house was going to close. She said, I'm going to be honest with you, probably not going to close. We don't have any money. You spent it all on her. And so, yeah, that would not be good. That would not be good at all. So I had some thoughts. I had some questions. Wanted to go over them with you. One, does it matter if it's real? So the TikTok isn't real, and the mortgage officer says that it's a reenactment of the actual call. I don't know about you, but the fact that she goes out of her way to say it's a reenactment makes me believe that the original story is real. So I tend to believe. I don't. You see some things on TikTok and you're like, that's fake. This I think is real. But does it matter if the story is real or not? To me, not really. In this case, she's pointing out something that frightens many of us in the real estate industry. Someone not being able to afford a home that they have under contract to buy. So like one of the worst things that can happen to you as a real estate agent is that you get all the way to closing and the house doesn't close. I mean, that's terrible. And it's that same way. I mean, you've done a lot of work up until that point. So you want it to close. And then I was thinking, and you probably don't believe this sort of thing happens. And why don't you believe it? Do you think it's because you'd never do such a thing yourself that it wouldn't happen? Like I think I would never do something this stupid. I have a hard time believing that it happens too, and I'm in the real estate business. There's something about like a narrative that we all believe that this type of thing doesn't happen. Like you go and you get a mortgage and you go looking for a house and you find the house of your dreams and you put in an offer and it's accepted and you close and everything works out. And so I don't know why. I guess because it works maybe 90% of the time. But it does happen, and it's absolutely terrible when it does. Here are a few things that I know happen, and it's not usually this dramatic. So I typically work very, very hard with the buyers so that nothing bad happens and that I'm not wasting my time. So we get pre-approval letters, we talk to the lender. What are the things that we see that could go wrong on the buyer side? And we try to mitigate anything on that side. So I've never had anything like where somebody just spent a bunch of money that doesn't exist. But I did want to tell you ways in which it could happen that your loan doesn't close. And one of those is you open a new line of credit in the period between the time you have an accepted offer and close on the house. So that's one of the reasons. Another reason is you lose your job. Now, during the coronavirus, when it was really, really flaring up and we didn't know what was going on, there were all kinds of attachments to the contract that said, like, as far as I know, I'm not losing my job due to the virus and things like that people had to sign because of so much uncertainty. But I've actually I had one buyer lose his job in the middle of the process, and he was under contract to buy. And with the work that I did with my lender, we were able to, we had to postpone the closing for 1 day. So that's the worst that's happened to me in the situation. Or another reason why things won't close right is something on your application doesn't line up with what you have when you go to close. And this normally happens with sloppy loan officers. So they just take your word for what you said that you have, and then they write a pre-approval and it means nothing. So that when I go to actually write an offer on a house, the person's not qualified. It's not going to work out. One of those examples is say you tell the lending officer that you make only that you make 100,000, but you really only make 40. I mean, that's going to make a dramatic difference in the approval level. But it's not enough to know that it does happen. Like, why does it happen? And the reason why I think it happens is I don't think that people realize how strict the underwriting is when they're in the process of getting a mortgage, especially when you contrast that with, like, for instance, buying a car. I'll have people say, well, I have bad credit, but I'll have my parents co-sign on the loan. And really it doesn't make that much difference in a home loan, but it does make a difference in a car loan. The only thing the lender has to go on to give you the loan for the house is the information that you provide. Therefore, if the information isn't accurate, they can't give you the loan. And it'll manifest itself like this. Let's say you're pre-approved for a $400,000 home. Home buyers who are approved for a $400,000 loan rarely buy a home in the 200s. They look to maximize that purchase. But that's the limit. And that's where people miss. What the bank is saying is that you're approved up to $400,000, giving the information they have. If the information changes even slightly, we'd have to re-examine the loan limit. Now, as an agent, I only get paid when we close on the home, so I have a significant interest in getting to that point. It's devastating not to be able to close on a property. That's why I tell my buyers horror stories of people who couldn't close because of an issue like this. I don't know if it helps or not. My last question is the agent at fault for a buyer not getting a final loan approval or clear to close? And that question is for you. I don't think so. I'm significantly biased as a real estate agent who is compensated when someone closes on the home. I think that the lending and agent functions are separate. As an example, other than getting a pre-approval for the offer, I really don't pay that much attention to the process. And really, it's not like I can provide banking statements or any other private financial data to the loan officer anyway. I do think that if a loan officer gives me a letter that says the buyers are qualified to a certain number, that is a reasonable number I can go off of during the home search and the effort to get an offer accepted. So like if a loan officer gives me a letter that says these people are approved for X amount of dollars, I believe I can go out and we can look at houses in that price range. And that when we go, after our offer is accepted, we can go and have the loan closed. I think that's the minimum to expect from a good loan officer or mortgage lender. But what do you think? Is it the real estate buyer's agent at fault because the buyers bought something or opened up a line of credit without the knowledge of the loan officer or the agent between the offer's acceptance and its closing? So do you think it's my fault when a house doesn't close because the buyer went and bought something they shouldn't have, even after I've told them? I don't think so, but I'd be interested to know what you have. So put it in the comment sections. With that, I wanted to say thank you for watching. Thank you for listening. And I'll catch you on the next one.